believe in working with you to find a way to get things done. We call this Africanacity.
Good afternoon, everyone, and welcome to our webinar, Borrowing Through COVID-19 and Navigating the Impact for Our Consumers and SMEs. I am going to open with an interesting statistic regarding SMEs. Statistics show that SMEs represent a significant part of the economy. They constitute about 90% of private business and contribute more than 50% of country employment. They make up as much as 40% of gross domestic product in most African countries. Therefore, we are very conscious that SMEs are vital for the economic growth across Africa. When a crisis of COVID-19 magnitude strikes, it is our role as a responsible lender to put forward immediate and long-term solutions to proactively manage the downturn and financial distress it brings for our customers. I would like to introduce my co-host, Pankaj Talwar, Chief Risk Officer for Africa. We will be facilitating the discussion this afternoon with our panel of experts. Pankaj and I will facilitate a series of questions for about 40 to 45 minutes, after which we will open up to the audience for further Q&A questions. The Q&A will be facilitated through a series of questions through the chat, which will be streamed to us by our technical team. Pankaj, I'll now hand over to you to introduce our team of panelists.
Thanks very much, and welcome everyone. I'd like to introduce, first of all, Thabo Molefe, who's head Rest of Africa at TransUnion. Andrew Madeswi, Chief Operating Officer, Entrepreneurial Development Agency. Bismark Moono, MD, Gertmark Agency. Bruce Jaani, Director, Business Banking, Absa Bank, Zambia. Valeta Mthimkhulu, Director of Retail Banking, Absa in Botswana. Thank you and welcome everybody. I'll go straight to then the questions. So the first question is, some governments have been praised for their quick and decisive response during the COVID pandemic. Some nations have imposed state of emergencies, and some have even imposed very strict lockdowns to protect citizens at large. What are some of the lasting effects from this lockdown period on small businesses, and what can be done to improve the situation? Bruce, I think if we can take that question.
All right. Thanks, Pankaj, and good afternoon, everyone. So I think that's very important for us to put that into context, because obviously, as we have seen, first and foremost, is that a number of countries have responded differently to, the COVID pandemic itself. We see it in the media, we see it, in print as well, that others have responded very well. Others are battling, obviously, to contain the COVID pandemic itself. I just thought of obviously putting color to that initial comment that you've made. But I think bringing it down in terms of what the lasting effects have been for the SME, I think the first thing that we have to bear in mind is that an SME, like Famida has said, is a business person. So they are in trading. They are basically there to make money. So in this particular instance, we have seen that the lasting effects is that revenues have actually clearly been wiped out. Some of them to a large extent, to a larger extent than others, depending on the sector that the SME is involved in. And with that, critical obviously is that demand and supply has been affected. On the supply side, if you were to think about it, the SME obviously, their supply chain has actually been affected to a large extent. They can't get their inputs in for them to become productive, which is a big concern for most of the SMEs, to the extent that now they can't produce for resale. That's one piece. The second piece is obviously on the demand side. The SMEs now have been affected because a large number of their clients, can't afford. Majority of them, businesses have closed down. There has been pay cuts from employers, basically just to sustain their businesses. Others have had to experience layoffs. So those kind of things have actually impacted, the demand side for SMEs to a large extent, that their revenues have been impacted. So with that, obviously, given the lockdown, some of them can't export. They were into the export market, which is a big thing for quite a number of our SMEs. Others within the country itself, because of the lockdown, the market has actually been squeezed out completely. So those are some of the lasting effects that we have seen with a number of our SMEs. Obviously, the question is then, how do we then look forward in terms of coming out of this particular situation? I think the first thing that I see personally is that we have to build first and foremost the resilience and capacities for these SMEs. Because, like we said, they comprise 90% of employers, and contribute largely to the pools of most revenue authorities in country. So I think capacity building entails that first and foremost we have to find solutions for these SMEs, for them to trade out of the current environment. Be it working capital solutions that we're looking at. Be it capex, if they want to reinvest, obviously in this period, where there's a number of initiatives that governments are putting across, where it's now about buying local, and so there's capex requirements, so that the country, or in that particular country, you can become self-sustaining in terms of producing rather than relying on imports. That's something that we have to look at. So that's one piece. The second piece is obviously looking at various collaborations and initiatives that are being driven to try and create initiatives for export markets, because obviously the local market probably cannot take up majority of the output that these SMEs are looking at. And so that is critical for us to look at that. Then thirdly, obviously, is to make sure that the digital agenda is one that we push ahead, because obviously in terms of the models of how the businesses are going to operate has changed. If an SME was obviously operating from rented premises, probably it's high time they thought about them operating from a digital environment, so they can create a marketplace where they can be able to advertise and sell their goods to that extent. So these are some of the things that we are looking at, and in terms of trying to get SMEs up and running, and create that resilience that we are looking for, and capacity for our SMEs. So Pankaj, really, I think the opportunity is out there. It's basically for us as Absa to make sure that we handhold them, we work with them to create that resilience and that capacity for them to sustain this, this period of COVID. COVID is here for a long while, and obviously SMEs are looking to the bank to basically solution them from a financial solution as well as other non-financial solutions, so that we can, sustain their businesses. So I think that's my view in terms of that piece.
Thanks, Bruce.
Thanks. Pankaj, as your role of CRO, how have you seen banks in Africa respond to the pandemic in terms of supporting their borrowing clients compared to their global counterparts outside the region? Will the African consumer or small business likely to emerge weaker or stronger in comparison as a result of this?
Thanks, Farida. I think there's been very good cooperation. I think really it started with engagement with the regulator, engaging as an industry in terms of what the response was. And I think that happened in a very speedy way. I think that agreed the minimum standards. And I think a lot of the banks have gone above and beyond the minimum standards. I think typically what the first round of solutioning was to give relief to both consumers and to businesses, and try to keep as much friction out of it, while ensuring customers understand the implications of the solutions being offered. So I think that was done very quickly from March onwards. I think from a bank perspective, we extended payment holidays on the retail consumer base to well over 20% of our balance sheet and customers. So I think that was very well received. And I think we provided and ensured through communication there was a lot of frictionless. There wasn't lots of forms and processes that we had to do. I think coming onto that from a business perspective, sometimes you've got to solution that with a slightly different lens. So it's not a one size fits all, and it's understanding the sector, the industry. So for some tourism or whatever, where it's more seasonal or longer term, then you might have had a different solution. And then with the business, it tended to be more one-to-one collaboration. You know, as we've journeyed through the lockdowns, etc., we've also then seen those payment holidays come into maturity. And then I think the next round of those, the banks have still gone back and solutioned with the customers where we need extensions or restructures, or where the consumers or the businesses can return with normal terms. So I think those sort of things have been very key. I think the key takeaway really was around focusing on doing the right thing. I think nobody really knew all the answers. We don't know how long these things were going to last for. And it was important to do the right thing. And then as we got more information, react and adjust the business strategy. And I think really the banks and the regulators, I think, really came to the fore during this crisis.
Thanks, Pankaj. Bruce, do you want to perhaps maybe comment on that, or?
Yeah, if I may add, and I think and thanks, Pankaj, because obviously you've shared color in terms of what, as a bank, we have done over the last couple of months. And I think in addition to, solutioning from our balance sheet, I think, different regulators or governments have given stimulus packages, which quite a number of our customers, our SME clients, have actually latched on to. These obviously have given, cheaper funding, long tenures, different structures in terms of payment holidays. So I think that has really put the bank in good stead in terms of, customer centricity, and obviously ensuring that we build that resilience and capacity in the SMEs that we are looking at. Because remember, we don't know how long this pandemic is going to be with us. So the issue is obviously to facilitate and ensure that our SMEs are adequately, resourced from a financial perspective with the right structures to make sure that, they can sustain themselves and they keep people in employment.
Thanks so much. Thank you. Bismark, as an MD of a company, you've obviously seen other businesses under distress. So we've seen that some borrowing consumers and businesses will now have unfortunately fallen behind on their repayments. What are some of the positive steps you have seen from lenders? And is there more that could still be done in a sustainable yet impactful way?
Thanks, Samida. I think for me, there's two things that really do stand out. The first one is what we saw right at the beginning of the pandemic. We saw lenders, and perhaps Absa to be specific, being proactive and engaging the business community, calling them to sit down and then agree how to restructure some of the facilities that we're running. So I think the proactivity that we saw, from the lenders was amazing. Then you realize that these people are not just here to take, but they're actually business partners, and they're ready to work with us and hold our hands and to make sure that we go through the pandemic. So yes, Absa did go to the press, and calling all the customers to try and restructure the loans. There was moratoriums on the capital as well as the interest part of the existing facilities. So that was really great. And I think to back that up, there's another thing that has happened, in some governments where the central bank has come in and has pumped in a stimulus package in the economy. For example, in our patch where we are, the central bank, which is the Bank of Zambia, did release or make available nearly $500 million, or 10 billion kwacha in local currency to banks to then extend this money to the business community. So for me, those are the two big things that we've seen and two big positives that we've seen come through during this pandemic. Is there more that can be done? I think the answer is yes. I do understand that the money that came from the central bank, the COVID stimulus package, if you like, does have some conditions to it. I think there's some specific sectors of the economy that it's targeted to assist. There might be a few that may have been left out. So I think this is where we encourage the banks, the lenders, to then come up with another sort of in-house solution to assist those few sectors that may not be part of the government stimulus package, to make sure that the impact is mitigated as well. The other thing that the lenders could do, they need to start having the conversations with the business community in terms of diversifying their portfolio so that in future, if something like this happens again, they'll be able to mitigate the impact. And finally, obviously, to see how quickly they can turn around the time in terms of processing these facilities, especially in times like this.
Thank you. Thank you. Valeta, my next question is to you. Africa has a growing and vibrant population with a strong entrepreneurial spirit. Whilst the pandemic has brought turmoil and sadness, it has also pushed the society further along the entrepreneurial road as everyone seeks to innovate and digitize in order to solve emerging challenges and make transacting safer. This creates opportunities for partnerships between entrepreneurs and banks, which benefits both parties. Are banks seizing this opportunity as quickly as they should when compared to other service providers?
Thanks, Femida. I guess the short answer would be I believe banks are making progress, because really at the core of innovation in any society, it is really driven by the need to, meet the evolving needs of the communities, right? So when we look at, what the pandemic has done, is that it has forced all of us in different industries to look at what we're doing, how we can do it differently, because what it has done is that it has pushed us onto this journey of change a lot faster than we would have gone probably willingly. So we are making progress. I think other sectors have moved a little bit faster, but that doesn't mean that there aren't any opportunities. So one of the things we immediately had to grapple with was, the need to reduce transactions in cash, and how do we do that in a way that keeps, everybody safe. So we started looking and first of all inward to say, what is it that we can deploy quickly? So things like contactless cards came in handy because that allowed, clients to transact in a safer way. We also started to look at where are the opportunities for partnerships, and that journey is still something continuing. And one of the things we're looking and working very hard to solve is, the movement of paper from a client into the bank, and how do we reduce that? Where I'm encouraged, Femida, is in the sense that when we look at it, I see a lot of conversations around incubation hubs, around banks looking for partnerships, talking to MNOs, and really starting to get that conversation around how do we create or co-create platforms that allow our society to benefit in the way that they transact. So the right conversations are happening. However, when I do look at it, we also still need to interrogate ourselves further and look at the sectors that we need to support more strongly, I guess, in a COVID environment. So when we look at the informal sector, which is a sector that's coming out, quite strongly with the impacts of COVID that it's had on employment. How do we continue to innovate to provide solutions? So we have, as Absa solutions like Timisa, like Jumo, that's starting to talk to that area. For me, those conversations are healthy, continuing. The further conversation would be coming back to the point, that what Bruce and Bismark has made around how do we then support these entrepreneurs who are working very hard to create these solutions, right? So that talks to our lending models internally. Because we're going to need to innovate and look at things a little bit differently about, if somebody is creating a solution for schools to sanitize, how do they raise capital? How do we partner them? How do our models evolve to kind of change and support that? And I think that journey is a journey for development, looking at the skill set that we have as banks in terms of our governance, our processes, our internal models, in terms of now saying how do we quickly change and also partner our entrepreneurs in bringing these solutions to life. Thanks, Famida.
Thanks, Valeta. Andrew, can I maybe also ask you to comment?
Thank you very much, Famida, and I must say to Valeta, that was well articulated. However, yes. I think what I would say is that the response has generally been within acceptable levels, both between the business community and the banks. But of course, there are instances where banks would have received this with skepticism, and rightfully so, because there's been quite a number of solutions that stormed the market at a record high level within a very short space of time. So it's very necessary for banks to ensure that there is alignment between the investment that is put into this solution to digitize mostly or come up with other solutions that brings in efficiency, that the debt that is being acquired, there is an alignment with what the solution is about. I think what is also very key is that this is more than ever the time where banks have to be paying careful and personalized attention to businesses, because what is expected at this point in time is banks that are very agile, that are creative, and that can be very flexible to respond to each and every business that requires that support to be sustainable. And you can only attain such when you are very attuned to the business, understanding it very intimately, such that you are able to tailor-make every solution, because there are sectoral effects that affect sectors at a high level, but there are also at an enterprise level where there are certain instances that needs to be attended at that level. But without proper and intimate understanding of your customer, your agility would unfortunately not be good enough, and you will not be good enough to be responsive to the client at that particular time. So I think this is the time for banks that go into the future. The relationship should not be mechanical. It should evolve to be a very intimate level. How banks can do it, they need to invest so much in their systems to ensure that they are able to pick demographics and understand the nature and the behaviors of their businesses. I think that's how much I would add. Thank you very much.
I'll take over from Famida for a few questions. Banks rely on data, and I want to build on some of the conversations we've had. I think those were a good intro, Andrew. Banks rely on data to make informed data decisions. What are some of the technology developments that have emerged out of this crisis period, and which banks are now using, and where are there further opportunities? I don't know, Thabo, if you can give us a response to that, please.
Yeah, thank you, Pankaj. There are several, right? And probably foremost, I'll talk about, we've seen a proliferation of digital channels. That's where a lot of the banks have gone digital channels. I think Valeta spoke about contactless transactions, or an acceleration of cashless, transacting. That's what we've seen. And to this extent, what has happened is that what this has led to is an acceleration of mobile money and digital channels that have happened. And we've seen some things. For instance, they were making moves like waiving bank to mobile wallet fees or mobile money to mobile money to bank charges. That's the first thing we've seen. And if I look at it country by country, in Kenya, for instance, the banks waived fees on PesaLink. And PesaLink is a mobile money transfer service which is owned by the banks jointly. So this is quite something significant because it's helped accelerate the uptake of mobile lending. And in Zambia, something interesting has happened. I think some of the banks in Zambia have noticed that they may not have the ability to develop some of this technology on their own. And some of them have actually started partnering with fintechs, right, where they didn't have a fintech division within the bank themselves. And there were some learnings that came out of this. And for instance, with Jumo, we've seen a few that have partnered with Jumo specifically. What this has allowed the banks to do is to actually have access to markets that they never had before, that they never had access to before. And it's also allowed them to grow their base in those areas that previously they'd never have existed. So we've seen a lot of banks starting to also, because of Jumo, starting to offer, and some of these fintechs offering small tickets via mobile as well. In Botswana, quite interesting. The MNOs have gone into this particular space here, and they've started to do this mobile money type of thing as well. But what this has done for the various locations that I look after is that in Rwanda we've seen some very significant and interesting stats. For instance, we noticed that in Rwanda mobile money grew 450% between February 2020 and May 2020. So subscribers to this kind of service grew 3 times. They went from 600,000 to 1.8 million, just from February to May 2020. When you look at Kenya on the other side, I mean, it's quite a big market. What we've seen there is just the value of mobile transactions has actually grown 25% between March and July 2020. Okay, with a total of about $4.2 billion transacted on mobile just in the month of July. I mean, that's quite a record that was set there. And when you look at mobile lending specifically, we're also seeing that the average lending limit for mobile loans by banks has grown by about 3.7% in the second quarter of 2020. Whilst at the same time, look at other loan types, there's been a drop of between 10 to 60% during that same period, okay, for other loan types. Now, it's quite interesting. And we've also seen that the banks have also started investing in 2 specific and particular areas. The first one is automation. And they've looked at investing in automation of decisioning solutions or decision processes. And what this has helped banks to do is to reduce the turnaround times when serving customers as they move them to digital. All right, so decisions now, when an application comes in, that happens very quickly, almost instantaneous. And the entrance of fintechs that I spoke about as well has also showed that customers, it's possible to onboard customers seamlessly. Okay, and it can be done anytime, anywhere. So the limitations that are imposed upon people by these hard lockdowns is that lending still happened even in that period and during that process. Now, a lot of banks are also starting to invest. I spoke about decision solutions, but also just the ability to seamlessly onboard new customers is a key thing that they're investing in. Beautiful technologies are out there. I mean, we've got some very nice technologies at TransUnion that enable customers to be onboarded very seamlessly. Now, the pandemic has actually not been able to have the effect that many thought it would have. When you look at another major investment, though, is data. Okay, so whilst investing in technology and stuff like that, data is a big investment that we're seeing a lot of banks actually taking up. And there are solutions that are good. I mean, TransUnion, we've got a lot of data solutions that can help banks better understand their customers through things like portfolio management, right? So when you look at the life cycle of a customer and you look at also data allows them to look at shifts and to see what shifts have happened in the market, because as we get into this post-pandemic recovery period, the biggest thing is markets have shifted. And if you don't know what the shift has been or where the shift has happened, you're going to make decisions based on what happened pre-pandemic, which may be the wrong decisions. Now, what this has allowed, this kind of thing has done for banks, this data that they've invested in, it's allowed them to also tailor-make products that match their risk appetites. Okay, so they're able to look at their risk appetite and say, here's what the data tells us, where the market has gone, and this has helped them to actually get there, right? So those are some of the big investments that we've seen that have been put out there.
Thanks, Thabo. I think just to build on that, I think there's more awareness can be done, education can be done around the implications of pain and what impact that has on data at credit bureaus. So I think there's still a lot of education. Some of the legislation doesn't cater for mobile lending on credit bureaus, and it has unintended consequences as well. So thank you for that. Just before I go to the next question, I just like to remind the audience that we're looking for this to be interactive and looking for questions from the audience. I don't see anything on chat, so I'm sure you've got questions you'd like to ask the panelists. So if you can just place them on the chat, and then we'll try to get to them a bit later on. Maybe moving to Valeta next. Banking clients typically worry about their savings and will choose their savings bank carefully. Should the same due diligence be applied when they are selecting a lender? In other words, potential borrowers, how important is it to choose a responsible lender and stable finances for your borrowing needs during these difficult times?
Pankaj, if one of the things that the pandemic has made, I guess, more obvious is that who you have borrowed from is as important as, who you are saving with. Because it's been a period where consumers have needed quite a bit of support as they've experienced different circumstances dealing with, the borrowings that they have. So definitely spot on. I believe that, it is just as important to put in as much rigor and research into looking at, who your lender is. So talking to consumers, one of the things that, we would look at, obviously, typically consumers would look at, what is the interest rate? Is it cheaper there? Is it better for me to go there? But also looking at, is this a responsible lender? Is this a lender who is, lending me money in a responsible way, looking at my ability to sustain and looking at, the income that I earn. So a little bit of research on the reputation of the lender is critically important. Talking to family and friends, understanding what the experience has been. And I think that's one of the key considerations. I think it's also important to say, when we sit down with our lenders, what is the conversations that we have at a personal level? Is the lender looking at, after your borrowing and your repayments are in, how much do you have to still sustain your everyday life? Does that conversation come to the fore? It is an important indicator of whether that is a good lender or whether you need to continue looking. From a business point of view, the support that comes with, running a business as you lend, looking at, is there any supportive structure around, helping you build, strength or resilience in your business? What happens if you hit a hard time? Does that lender offer you additional support? Or do they immediately come calling for their money? And I think those things have become very key and forefront, as we've gone through the pandemic. So when we're looking at options and, clients started coming in with different circumstances, talking about, the need to do payment holidays, different lenders did different things depending on their own strength as a lender, on their own balance sheet, and their own circumstances. So if that has been something that lenders have had to do, it tells us, when we're consumers, that we must also look at those things when we are thinking about taking on debt. And I think those are the considerations that, from a business point of view, we must look at, understand the strength of the balance sheet. Is this lender able to carry? Understand, does this lender, is this lender more interested in how I sustain myself as a borrower, or just in terms of just making off, the interest? So I would definitely recommend to, consumers out there, small businesses out there, to do in-depth research when making this critical choice, because that's, I think, a key lesson that's come from COVID pandemic and its various impacts on our livelihood. Yeah, thank you, Pankaj.
Thanks for that. I think it's also important, it's a two-way thing, that we shouldn't just chase for price and it looks for the broader proposition. I think lenders and banks are able to make more informed decisions based on information and history. And if we're just moving at a transactional level rather than what works for both the customer and the bank, then that way we get to the best solution.
Spot on. Yeah.
Maybe I'll take the next question to Thabo. Would you say the average consumer or small business has to this point been largely oblivious to their credit rating and its implications? How will this likely change through this economic cycle? And what are some of the key learning points for banking customers? What tools are now available for customers to have a closer grasp on this aspect of their lives and its operations and impacts?
Thank you, Pankaj. Yeah, definitely. I'd say that there's still a lot of ignorance out there. I think most of the consumers are still oblivious and unaware of their credit ratings and the implications. And this is something that we see not exclusively in the rest of Africa, but also in South Africa. I think that's the situation. But specifically in Kenya, when we've looked recently, we found that only about 8% of consumers that are involved in formal lending industry are actually interacting with their credit reports at least once a year. Many of them are not even aware that they're entitled to one free credit report on an annual basis. So it's still out there. And however, in Kenya, there are two initiatives that are being undertaken to drive this awareness of credit scores and reports and the impact of such things. I mean, the first one is the World Bank, in conjunction with the Treasury Department, have got a project to drive consumer education on credit reports and scores. It's an 18-month program, from what I understand. It's focusing on demystifying credit bureaus and reports. And the idea is to help consumers to understand what things impact their credit health, right? And then the second one is that the Central Bank of Kenya has actually mandated the financial services industry, you may be aware, to adopt risk-based pricing for lending. What this actually does, or what it means for the consumer, is that it brings consumer credit scores and reports to the core. Okay, it brings it to the fore rather. And as part of this initiative, the regulator requires that lenders and credit bureaus undertake consumer education on credit scores and reports and how these actually impact individuals that are out there that are actually taking up these credit facilities. Now, in terms of how this is likely to change and what are the key learnings, I think as lenders drive digitization and adopt a wider use of data on consumers and businesses, we're going to find that there'll be an increasing awareness on the side of consumers and everybody, and their need to actually maintain good credit health as a new normal. You know, we talk about a new normal these days, and one of the things that people are going to be more aware, they're going to have to start maintaining good credit health, and that's what's going to happen there. And what we have decided to do also, and we continue whenever we speak to consumers, is to encourage them that during this period, they've got to protect their credit health. It's actually quite important. You know, one of the things is, if I may be a spokesperson for lenders, probably to say it's important that you make on-time payments for loans, you know, if possible, and also make an effort to resume your repayments immediately, even if it's just partial. Talk to your lender as soon as possible, because dodging your lender and not talking to them actually doesn't help remedy the situation. But people also have to check their credit reports regularly during this period. It's very, very important, especially to those people who took payment holidays, you know, that were offered by lenders during the pandemic. Now, as the reporting starts, it'll be important that people continuously check what's been reported on them and if it's correct or not, or on their businesses, and to check if it's correct or not, right? And the other thing that we've seen is that there's been a lot of crime where criminals have taken advantage of this period to defraud individuals in financial institutions using identity theft. Now, checking your credit report is going to enable you to see and identify whether any fraudulent loans have been taken out using your identity. And you need to work with us to make sure that this can be remedied. And by the way, there are actually solutions out there that are on offer, that we also offer, that help to protect identity fraud and against identity fraud and stuff like that. So these are some of the things that are out there for people to try and help themselves. Now, in terms of tools that are out there that are available for consumers to have a grasp on their credit lives and what happens there, we've produced and we've introduced in East Africa, in Kenya specifically, we've got something called Nipashe. And we've got Menyesha in Rwanda, and we'll be doing something in Zambia as well. And basically it allows consumers to access their scores and credit reports on their mobile phone, right? And it also helps them get alerts on how their performance is being affected through the activity, so they can get better insights with this. So as they transact, they'll get an update on how their behavior out there is actually impacting the view on their credit health out there in the market. So those are some of the tools that are available.
Thanks, Thabo. Back to you, Famida.
Thanks, Pankaj. So Andrew, my next question is to you. Times of significant change present challenges as well as opportunities. For an individual or business looking to respond, would you say this is a time to save and reduce risk, or a time to take more risk through debt? If debt is pursued, what measures can consumers or small businesses take to improve their likelihood of success and not put their future credit history under excessive risk of going bad? Can we touch more specifically on debt-related insurance and secured loans? Thanks, Andrew.
Okay, thank you very much, Famida. I think as the first foremost, the definition about dealing with all this is that most businesses, especially small businesses, the risk they're dealing with is the risk of survival. That's the most. So as a general rule, what is critical and what I'll say is the prudent and ideal position is for most businesses to hold the business into stability. That is what it is critical. Whenever they consider acquiring more debt or saving or any other decision that they are doing, the first question that they should have in mind is this getting me to hold on and stabilize the business? There's a lot of turbulence with COVID-19. There's a lot of change. The business environment is as dynamic as ever, and basically that's what it is. So one will say any measure of debt should be directly linked towards sustaining the business. When businesses think of acquiring business, they should be ascertaining whether this debt is towards sustaining the business as it goes through COVID-19. That's the most number one priority. If not, especially for small businesses, if it is not for survival, if it is not for sustenance, businesses should avoid taking debt during this pandemic. They should not take debt for growth purposes. It is not a very good thing to do, because change is on a very fast pace. And if you acquire debt without proper calculation, post-COVID-19, you'll be carrying it and it will be very difficult to drive the business forward. What I would say, Famila, is that when businesses look at acquiring debt now, they should also be considering whether is this debt for immediate use to put the business into growth of revenue. And for most businesses, it is very limited. That's why that judgment, you need to exercise it very, very careful. If it is not going to immediately generate revenue, you might as well just wait and hold the business into stability and wait for the time post COVID-19, because just doing it without that caution, it may dent the business's opportunity towards acquiring debt in future post COVID-19. And that era is going to come, certainly, when all challenges and issues and COVID-19 has been contained and we know how much to manage it. There will be life after COVID-19. And when it comes in, what shape and form is it going to find your business? If it finds your business highly leveraged, there may not be space at the right time when you need debt. That is what is careful. Timing is of essence. What I will also say at the moment is that at this point in time, businesses need patient capital more than anything for them to be able to sustain their businesses and use the time to plan for the future. This is the time for sustenance and planning for the future. And the best approach for those businesses that afford is that they must use equity. Equity should be their solution, if need be, for anything that they want to do at this point in time. Because like I've said, a heightened level of leverage at this point in time would most likely abort the future potential of most businesses if not properly executed. And that will be the time when they need it most to catapult their growth post COVID-19. And what I should also emphasize for me is that businesses should be cautioned not to fall into debt panic. Everyone is looking at a solution, and one of those solutions is to get debt. And there's that panic. Where do I get cash? How do I survive? What do I do? And debt is one of the solutions. And there is that panic. Some debt is just being acquired just in case I will need it, because I don't know when I'm going to need it because I'm scared. That panic should be avoided. But of course, for me, I'll say, for every rule, there are exceptions. There are businesses that will be exception to this rule, and those are businesses in the health sector. There has been valid growth in the health sector, and I would say for most, it is sustainable business opportunity that business in the health sector, if they need to acquire debt for them to exploit emerging business opportunities in the health sector that are going to be with the humanity for quite some time, then they should be able to do that, and it will be reasonable even for lenders to continue to consider such a business, because there are certain supplies that will live with us post COVID-19, because health protocols would actually dictate that that's how life should be into the future. The other exception to the rule also that I may also want to mention is that if the debt that you are acquiring is towards efficiencies to your business, if it is towards driving costs down for your business, then by all means, that is the right debt for you. That will be the right decision to make. So if it's going to bring efficiencies, going to bring down costs for your business, then that's a solution for you to exploit through debt. And you have also mentioned secured debt. Look, it is cheap money for customers. So by all means, if you can structure yourself to secure debt, please do so, because it helps you. It is secured. The risks at this point in time are just so high that lenders are looking for how much, in as much as we are trying to assist, how much are we mitigating the risk against all what is happening, that it is all uncertainties for everyone, but we have to do our best to manage as much as possible. Thank you.
Thanks, Andrew. Maybe let me take it over there and maybe ask a couple of questions from the chat. The first one I want to just cover off is around, how are banks doing in terms of SME lending? How is Absa doing? My observations would be, I think banks need to do more. And I think Thabo mentioned it early on. I think with new information, new data, we can get into the entrepreneur where they don't have accounts, they don't have history, etc., sort of thing. So I think it's up to banks to be innovative and try new things out there. But I don't know, Bruce, if you've got any observation, and then maybe Thabo.
Yeah, I think you're right, Pankaj. There's more that we can do, obviously. I think some of the issues are obviously legacy in terms of what was the strategic direction in terms of how we interact with SMEs in the past. And I think this has drastically changed, under Absa. Obviously, our drive is now to solution for Africa on that basis. So we have had a number of interventions in terms of how we interact with SMEs. For instance, from a lending perspective, we hear obviously the issues around accounts, how expensive they are to produce. And we've relaxed that to a level where customers can, to a large extent, produce their own accounts using a tool that we have provided as a bank. That's one. The second one is obviously if they can also have them done by their auditors. They don't need to be audited financials, but they can be management accounts to a large extent. So I think there are a number of interventions that we have put in place. From a lending side, I think a full bouquet of lending products are there, from working capital to capex to trade, and I think that's something that we have been able to do. And it's great that we have one of our clients on the call, Bismark, I think can attest to exactly where we are as a bank in terms of that journey. So I think that's my views, Pankaj, for the moment.
And thanks, Bruce. Thabo, any brief additions?
Yeah, I'd say, I mean, it's the same point that I'm going to repeat: data, you know, and there are alternative data sets. And these alternative data sets will show you, I mean, a 360-degree view of the customer and the consumer, exactly what they're doing and how they're behaving. But the most important thing as well is that as we're moving towards digital and the banks are moving towards mobile, it's also to understand the technology platforms that your customers are on. You know, because you could be pushing out via a channel that misses the market that you're aiming at, right? So you've got to understand what devices are they using, and I mean there is information like that. So companies like I mean organizations such as TransUnion, we're able to analyze. We've got a lot of that data that can tell you exactly what your consumers are using and what they're working on. Once you've understood that, you're able then to start you start tailoring products that are very specific to that individual. But not only that, you can also look at what their behavior is, just by looking at the devices they're using, their behavior on the device, and other transactions that they're involved in. That's very important. But the other thing as well is also to be engaged in education. Consumer education is very important. The more they are aware of their credit health, the more they are aware of their rights, is when lenders will have a wiser consumer, is a better consumer to have, because their behavior is going to be more profitable both ways, to the consumer himself and to the lender on the other hand.
Thanks, Thabo. I think also with data comes privacy, confidentiality, and we need to work through those challenges, etc., and acceptance of something that's new. I think the other thing that's I'm hearing from the discussion is, you know, consumer and bank behaviour has changed, and that trust relationship, I think, has changed. Maybe Valeta, briefly, any observations? Is it here to stay? Hopefully, it's not something we just had in bad times.
No, not at all. I think it is definitely something that's here to stay. And I think, you know, when you talk about this whole data thing, I think the positive thing out of all this, Pankaj, is that issues of information asymmetry and you know, everything being visible and transparent is something that is, you know, becoming apparent and I think continues to become more apparent. I do agree that, you know, as banks and any users of data, we do need to treat it with respect. You know, and you know, duly respect, you know, clients' confidentiality. But I also think that with the whole digital move and transformation, actually, you know, issues of, you know, knowledge is more readily available. And I think that change is a positive change, because when we're talking about issues of lending, it's no longer really about, you know, here is, you know, the form, you would read it. I think we have an ability as consumers to research, to read, to understand, ask questions and do further due diligence. And I think that is an important aspect of what comes with the whole movement of data and how we're transacting.
Thanks very much. I think there's another question, I'll briefly touch on it. Will COVID-19 change the face of retail banking? What are some of the forces that will impact that? I think the panel have done a good job in answering that. I think, like with most things, no waste a good crisis, and let's ensure the things that are positive, the move to digital, the move to improve customer experience, the better engagement, the trust thing that we've talked about. I think those are key. And if we go back to data, even the past data is not going to work like the new data, because I think the impact of COVID has impact from a risk perspective and a lending perspective in different ways to the past. Before you could pay or not pay. Now it might not be because you can't pay or not pay, it might be because of the industry or the sector that you worked in. So again, banks need to rethink their approaches, and to Thabo's earlier point, how they read historic data during this crisis to make sure they make the right sort of decisions on a go-forward basis. So I think there's some relearning to be done. Famida, I'll pass over to you.
Thanks, Pankaj. So I think we just have 5 minutes left, and I think we're gonna go into our closing. So just from my end, I want to say thank you to all our panelists and our external guests for making the time to attend our webinar today. So thank you so much, guys, for making the effort to make our webinar. Are there any closing remarks, anything else that you want to add before we close our session today?
Yeah, I think from the SME point of view, as being one of the customers for Absa, just to thank them for the efforts that they're making in our country, and I'm sure it's happening in various other countries in trying to mitigate the impact of COVID-19. I think there's this. We need to demystify this thing, that the banks are not holding the hands of SMEs. I think I can attest to Bruce's point. There's many things that has happened from that side, relaxing some of the strict rules, to get the facilities from the banks. So yeah, I would just like to encourage them to continue these kind of things. And I think it will really help the SMEs in Africa in general.
Thanks.
Yes.
Thank you so much.
I think I just want to add, sorry, I just want to add thanks to the audience as well. Otherwise, we're just talking to ourselves. So thank you for those that are watching this webinar. And again, reiterate Femida's comments in terms of thanking the panelists. Any last closing remarks?
Yes, Pankaj, if I may, I think there's quite a very good work that is put by most businesses, especially around digitization. And I think my comment on it is also to say, as businesses, we should also not be overzealous with digitization, to a point that we forget that it is there as an interface between human beings. So there should be an emotional engagement that is plugged in for any solution. Most solutions, you find that they come very mechanical. You send me information through your platform and you don't expect me to respond to it because no one is going to attend to it. So I think more and more we need to be saying, we are using platforms to make engagements much more effective and robust and efficient, even in terms of time to reach out. But at the back of it, when the client, we are just communicating with the client. So communications cannot be one way. If they want to come back to me with that information that I've shared, what is that platform? It is not, you can't reply to this message. So I think that's basically my last point that I need to put there, that human beings will always be human beings. They are emotional beings. Whatever we create to try and serve them, let's dilute the mechanical relationship, because they also have moments where they want to talk to the information that you are sharing. Thank you.
Yeah, and from my side, I think my closing remarks will be very brief. It's just simply to say that there's power in information. So that's why we say information for good. I think both for consumers and for SMEs and for lenders as well, consider the cost of not knowing. It's very costly. So it's important that we keep ourselves in the know by accessing that information that's going to help you understand which way to go and how to get there. Thank you.
Thank you, Thabo.
Yeah. Thanks, Pankaj. I think for me, my closing remarks are that I think we're open to business. Our Africanacity story is so true as a bank, and in Zambia, obviously, we are open to business in terms of solutioning for you, and we obviously pride ourselves, banking you, our viewers, our listeners, in terms of SMEs, and we're quite happy to have conversations with you. And there's a lot, on the horizon in terms of how we want a solution for you from a digital perspective. From a lending perspective, we know that there's a lot that we can do, and already we are working towards that to ensure that you have a full bouquet of your needs solutions. So I think come and talk to us. We're open to business.
Yeah, definitely, Pankaj, would like to echo that. This has been a great conversation, and we do continue to invite our clients to say, whatever your circumstances, whatever your situation, we know it's a unique time. We're here, we're ready to listen, have a conversation, try and find solutions to make it work. So definitely come have a conversation with us, and let's keep talking. Thank you very much.
Thanks, everyone.
Thanks, everyone.
Thank you.
Thanks, guys.
Thank you.
Thank you.
Everyone.